Hi, I'm Dr. Emily Roberts, the founder of Personal Finance for PhDs. I'm a financial educator specializing in graduate students, postdocs, and PhDs in their first or so real jobs. My website is pfforphds.com. The contents of this video are for education purposes only and should not be considered tax, financial, or legal advice for any individual. This video answers the question, why is my fellowship tax bill so high? I'm assuming you found this video because your tax software or tax preparer has delivered some really unwelcome news, which is that you owe a very high tax bill this year, perhaps $1,000, $2,000, $3,000, or even more. And you are panicked because that is a very large amount of money for a graduate student or postdoc to come up with. This is unfortunately a very common occurrence for graduate students and postdocs whose stipends or salaries are paid by fellowships or training grants and not reported on a Form W-2. Specifically, this video is for postbacs, graduate students, and postdocs who are U.S. citizens, permanent residents, or residents for tax purposes who are attending a university or training program in the U.S. Furthermore, all or part of your income is not reported on a Form W-2. I'm going to refer to you as a fellow in this video, although that might not be the same term that your university or institute uses. In this video, I will explain why graduate student and postdoc fellows often face these large tax bills. I'm going to focus on federal tax alone. In the companion video, What to Do When Facing a Huge Fellowship Tax Bill, which is linked in the description below, I will step you through what you should do if you are facing a large fellowship tax bill. In all likelihood, the reason you have a high tax bill due is that your fellowship is taxed as ordinary income, but you are not having income tax withheld from your paychecks. I'm going to break that statement down now so you can fully understand it. Point number 1, your fellowship is taxed as ordinary income. What this means is that the federal government taxes fellowship income that you receive as your stipend or salary at the same rate that it taxes employee income. I'm hand-waving a little bit here and making some assumptions, but this is roughly correct. I'll point you to a resource in a moment to help you get this exactly right if you're interested. The general point is that your stipend or salary is subject to income tax in the same way that employee income is. That is to say, part of it is tax-free thanks to your deductions, part of it is taxed at 10%, part of it is taxed at 12%, and if you were particularly well paid, perhaps some is taxed at one or more even higher tax rates. These are the ordinary income tax rates. The taxability of your fellowship income may come as a surprise to you because there are endemic rumors running around universities that fellowship income is not subject to income tax. Sometimes even tax professionals say the same thing, although they are mistaken. Fellowships used to be exempt from tax, but that changed with tax reform in the 1980s. If you want more discussion about the taxability of fellowships, I encourage you to listen to my previous podcast episode on the subject, titled Do I Owe Income Tax on My Fellowship?, which you can find linked in the description below. One additional quick note is that you should not pay self-employment tax on your fellowship income. Assuming that you're not otherwise self-employed, if you see that your tax return includes a Schedule C for your fellowship income and or there is an amount listed on Schedule 2 line 4, that means something has gone dramatically wrong with the tax preparation process. It is vital that you correct that error before filing your return. I told you a moment ago that I was hand-waving over some details about how fellowship income is taxed. Your taxable income from a fellowship might not be exactly the same as your stipend or salary. It could actually be slightly more or less depending on your individual circumstances. If you are a graduate student and want to go really in-depth with this material, or are trying to correct the self-employment mistake I just mentioned, I encourage you to join my paid tax workshop, How to Complete Your Grad Student Tax Return and Understand It Too, which is linked in the description below. Point number 2, despite the fact that your fellowship income is taxable, you weren't having income tax withheld from your stipend or salary. The vast majority of universities and institutes do not withhold income tax on fellowship income. Universities are required to withhold income tax on behalf of their employees. Employee income is reported on a Form W-2, but you are not an employee with respect to your fellowship income, so the university has no obligation to withhold income tax on that income, and the majority do not. Here are some common scenarios that graduate students and postdocs face. 1. You were an employee, either at your university or elsewhere, in the first part of the calendar year, but then you switched onto fellowship income with the new academic year. In that case, you had income tax withholding on your income in the earlier part of the year, but it stopped when your funding source changed. Also, vice versa, you could have switched from fellowship income to employee income mid-year. 2, you received fellowship income for the entire calendar year, and you had no income tax withholding during the year. 3, you had 2 concurrent sources of stipend or salary income, one from an employee position and one from a fellowship. You had income tax withheld on the employee portion, but not the fellowship portion. Even though you had withholding through the entire calendar year, it wasn't enough to cover both sources of income. I understand that you may be frustrated that your university or institute did not withhold income tax on your behalf. I wish that they all would offer this benefit. The very least they could do would be to give you a heads up that they're not withholding income tax, but that you still may have a tax liability. But I'm guessing because you found your way to this video that they did not. And I'm really sorry that you're in this situation. Point number 3, your tax return compares your calculated tax liability for the year with the income tax withholding that the IRS received during the year. For most households in the US, their income tax withholding exceeds their income tax liability. So after they file their tax returns, they receive a tax refund. That's the excess money that they paid in through the year being refunded to them. The opposite can also happen. When your tax liability exceeds your income tax withholding, you are expected to pay the balance when you file your tax return. Now you can see why you're facing this large income tax bill. You had taxable income, but no income tax was withheld or not enough income tax was withheld, and now the IRS expects you to pony up the difference. After you finish this video, I encourage you to watch the companion video linked in the description below, What to Do When Facing a High Fellowship Tax Bill, especially if you are unable to pay the entire bill right away. If you would like to learn more about income tax on fellowships, please register for my free email course on the subject, which is linked in the description below. You can also find it at pfforphds.com/fellowship tax. It's going to explain the previous points in even more detail and link you to lots of additional resources. Again, I'm very sorry that you're facing a high fellowship tax bill. I wish things hadn't played out the way they have, but just know that you will get through this, and ultimately it will just be a small hiccup in your financial journey.